All right, good morning. Let's go over today's trade plan. So in the overnight session, we were watching that 44.75 to 46.75 area. That was the key breakout area and the key resistance that we broke out from yesterday. So that was really a key zone in the overnight session, and that's where the overnight low ended up being. Buyers stepped in and then pushed ES above yesterday's high. So short term, that tells us that there is a certain level of strength that's continuing in this market. The only issue here is that we still do have resistance at that overnight high, 59.5, and then above it, the primary upside target in the main resistance zone is at the 63 quarter, 65 quarter initial resistance. We have the 64.5 HVN up there. That would really be the primary target in the event of a continuation move, and that makes it a little bit tougher because you have to get very good trade location in order to really take that trade, and you want to see something, some level of strength in real time after the open as well, to really execute on the long side at some of these higher prices near the overnight high, expecting a move up to initial resistance, and even then, it's not really too far away at this point. That 64.5 HVN is pretty close by, so we just have to keep that in mind. The other thing is that there aren't any major econ reports pending today, and we have the FOMC announcement tomorrow. Now, that doesn't mean that we can't get a decent move early in the session and then kind of chop and balance, in the afternoon, but we do have to be a little bit more cautious because of that. With the Fed announcement tomorrow, today could be kind of a balanced or slower day. Right now we are a bit overextended to the upside, so at this point, anyone who's entering long at these upper prices, they would be categorized as an aggressive buyer because they are entering at, short term at least, at some elevated prices where the target is not very far away. That 63 quarter, 65 quarter, the HVN up there is really a key area. If we can go through that zone, that would tell us that now the long-term buyers are being aggressive as well, and that could actually eventually set up a move back up to the all-time high. So, this initial resistance zone is pretty key on the day time frame today. With the, Fed announcement tomorrow, we may not be able to, take that out, go beyond initial resistance on the day time frame. So, today, we're either waiting for the market to tip its hand and kind of show us that there is a lot of strength in the market, similar to yesterday, where we saw the open drive, we saw the strong internals, and that gave us the conviction in the trade, and it made sense to jump in. It's a very similar scenario today, where we've seen an overnight breakout. We're at even more elevated prices than yesterday, and again, we either want to see something after the open that gives us some conviction in the upside, and justifies taking some aggressive entries, targeting initial resistance, or the other option is that we wait for some more conservative trade location if we're trading on the long side. Now, we're not in a market where we're only trading longs. We are open to trading the short side as well because, short term ES is a bit stretched to the upside. So, we are open to the short side as well. It's just that on both directions we have to be just more careful, a little bit more cautious, just because the overnight strength has held up pretty well, and there may not be a whole lot in some of these trades. So today, I think the best case is to wait for the open, see whether we're able to stay above the pre-market support 54, 56. Are we holding that breakout area? If we are, and the internals are heading higher and the tick is holding up, then we can consider a long trade for a breakout above the overnight high. But if those signs are really not there, and the internals are quite mediocre or even heading lower, then we may not even take out the overnight high and come back down to the gap fill and potentially even lower. We're using 44.75 to 46.75 as the bull bear zone at this point. That was the key breakout from yesterday. We held above it overnight, so it's a pretty key support area at this point. As long as we can hold above it, we can still be kind of bouncing at these upper prices. If we take out the 44.75 to 46.75, then we would be looking for a short-term liquidation move down to 38.5 to 40.5, where we expect buyers on first test, and then potentially even lower depending on what type of volume we're running on the day time frame. I think a deep pullback would probably hit a short-term exhaustion by the 38.5 to 40.5. And again, with the econ calendar in mind and the FOMC announcement in mind, it's unlikely that we'll just liquidate big, one day ahead of it. But if you start trading below the bull bear zone, then you certainly want to be cautious on the long side, because at that point, anyone who is looking to trade the breakout or expecting a move back up is going to be in a losing position, and that can result in some liquidation down to 38.5 to 40.5, potentially even 33 to 35. So as long as we're holding above the bull bear zone, we're expecting more of a two-sided type market. Above pre-market support, it's quite bullish, and we can go up to 63 quarter, 65 quarter. At initial resistance, we can get a sell response. If we don't get a sell response, then you want to step out of the way, because we could be testing 67.75 and potentially even 70 to 72 before the buying shuts off. And then we can expect a sell response at 70 to 72. So those are the ideas to keep in mind. Let's see which areas ES is holding off the open. That'll give us a good indication of how much strength or weakness is in this market. And based on that, we can either justify aggressive trades, or we can simply hold back and wait for more conservative location, or potentially even consider shorting the market if it's presenting itself as a weak market where the internals are diving lower and tick is spending more time below zero, and all the usual signs that we look for. So those are our main ideas heading into the open. Let's keep an eye on pre-market support, see how well we react to that, and we'll take it from there.